So right now, I'm going to be talking to Christian del Valle. He is the co-founder and managing director of Althelia Funds. My first question for you, Christian, is what would you say to a person or a company that's thinking about investing in natural capital in things like sustainable agroforestry, reforestation, and that kind of thing? How would you answer their question, why should I invest?
Good question. I think the fact is that different investors approach the natural capital space for different reasons and with different motivations. As I made the comment earlier in one of my previous interventions, contrary to the perception of many, in our view anyway, it's not a new asset class. It's pretty obvious that people have been investing in timber, other forms of agriculture, certainly industrial agriculture now for the better part of 200 years. And even prior to that, human activity largely was centered around converting natural capital, meaning our trees, our forests, our savanna, and many other natural resources, converting that natural capital into financial capital. So if you look at it that way, it's not a new thing at all. And in fact, with a few notable exceptions in the industrial age, and certainly since the Second World War, when the industrial age went into overdrive, there's not been much of a sustainability filter put on investment criteria in the natural capital space. There's some notable exceptions. So I think now is a dawning realization as we hurtle towards a global population of 8 billion and climbing, and more people, quite understandably, want to have more comfortable lifestyles, which involves more consumption. I think we're all collectively starting to realize that natural capital really has to be treated as a precious asset. Whether or not we're speaking of forests, clean water, biodiversity, etc. It's not just a cornucopia abundance that we can use and kind of toss over to one side as and when we please. So coming back to your specific question, when someone comes along and says, well, why should I invest? It's really important to understand what their core business model is. A lot of sort of high net worth individuals and family offices come to it because they've done well, they've learned a lot along the way, and they sort of share that vision, and they'd like to really leave an imprint and get involved and push out sort of the impact platform and leave a legacy, etc. They believe in it. That's a conversation that is in a way the most refreshing, because you find yourself often sitting there talking to an investor who already is very favorably disposed and doesn't bring a sense of conservatism or defensiveness. They've decided already this is something worth supporting. We have that type of investor in our first fund. We have a number of of family offices that are coming into the new funds we're launching later this year. I think some of the more challenging conversations occur with larger, either institutional investors who might very much see the vision, want to bring in these types of assets into their portfolio, but look at it almost as a puzzle because it just doesn't clearly fit into their existing allocations. So that's a challenge for us, because at the end of the day, our view is that whilst very much investable, and I think we've shown that in our existing fund and the portfolio there, it is very investable. It's possible to align financial returns, economic improvement on the ground, along with social and environmental impact. It doesn't necessarily mean that it sort of looks like the same animal that most institutional investors and certainly even pension funds and insurance companies are used to investing in. So the task for us is to work with that investor to demonstrate how, in fact, with mild sort of adjustments to the way they define their allocation, the risk isn't so shall we say, exotic as it might look at first blush, okay? And that becomes a little bit easier when you're dealing with investors who already know something about the natural resource space. They might already have exposure to agriculture and so forth, and they're probably, through channels other than us, are starting to realize that, well, in fact, the sustainability criteria of that, whether it's climate or other things, doesn't look so hot. And we want to start bringing on some responsible investments in this space into our book. So there's a lot of collaboration that goes on. We have an easier conversation sometimes with development banks and DFIs, although as is known to many people, the shall we say the availability of ODA, which funds the reserves of most DFIs is probably not growing. It's relatively speaking, it's shrinking. So it's very important and imperative for us to continue at the asset manager level to develop a strategy that has increasing attractiveness to the private sector. And that means really working to demonstrate the relationship between investment at the front end and creation of value and return on the back end. In a way that doesn't contain a lot of known unknowns in the risk department. Nevertheless, the truth is there are different manifestations of risk than investors are used to.
Ask you about that. Yeah, what are some of the obstacles or challenges that an investor might see? Some that you were mentioning, some of these institutional investors they find this exotic, even though I assume they're still getting a good ROI. So what are some of the risks or obstacles that?
The first one that comes to mind is that sadly, or like it or not, we do live in a world where the market, I put that in inverted commas, has very much got used to quarterly earnings, and quarterly reporting is not a problem for us. But what I mean by quarterly earnings being an issue is that generally on natural capital investments, the investment horizon is going to be a little bit more lengthy than it might be in sectors or types of investing than that they're used to. So I think what I was going to say previously is that it's also if an investor is interested in this space, in a way we're going to challenge them too to understand that perhaps the suite of products or the way they've defined the allocation in the past, it needs to be looked at again, and that's challenging when we're a relatively small guy and small fund. So so that leads me to the next part of my answer around barriers. So time horizon is one thing that we've looked at. It's also perhaps the size of the tickets. So with the Althelia Climate Fund, it being a €100 million fund, average investment size was roughly 10 million euros, thereabouts. Average investment from an investor into that fund was between 8 to 12 million euros. Now, a lot of the investors who I think, I'm thinking of insurance companies who have could naturally gravitate to this space, knowing what we know about the relationship between nature and its ability to mitigate natural disasters, etc., which are only growing. Will have issues around ticket size. They don't want to write a bunch of checks for $5 million. Okay, so they're looking for larger tickets, but at the same time, they don't want to be 30% of a fund, which is still deemed by them anyway as quite innovative and relatively new. So one of the barriers that we are working to overcome is how can we build structures that could aggregate larger tickets from bigger institutional investors and then have that allocated to a suite of strategies. And now that we've done the tie-up with Morova Responsible Investing, which is a subsidiary of Natixis, now that we have that sort of larger family to help us, put together some more standardized and sophisticated. So we're the synergies through distribution and so forth are significant. So we're able to work to develop these sort of feeder structures, and that's something that's very much on our horizon that we want to work towards, so that we can help on our side address some of these perceived barriers that maybe some of the bigger investors who might be interested but need to find a way in. This could address that. I think another thing that's worth mentioning, and it's something that I think we're pretty good at dealing with, at least through the experience through our first fund, is that many times when you're operating with small to medium-sized enterprises or even cooperatives in challenging jurisdictions, this is something that a lot of investors aren't used to. So when we started out with this strategy, one of the stories we needed to be able to tell in a compelling way was how our model and our approach to investing was going to help mitigate some of these risks inherent in dealing with effectively smaller, traditionally non-commercial counterparties. I think if you look at the structures we've used and the approaches we've used in terms of partners and internalizing different risk mitigation tools into the investment in places like Tambopata and Guatemala, diversifying potential return revenue streams. I think we've come up with structures that are approachable from the standpoint of the investees themselves, simple enough that a non-commercial entity can get their head around. You don't want to offer something that's effectively unsuitable for these guys, but is also relatively straightforward in terms of value creation that an investor can understand. You don't want to effectively ask an investor to turn himself into an NGO, an anthropologist, right? So we kind of act as that missing middle in a way, linking sources of capital that otherwise might not know how to get to. Yeah, but that translation, if you will, translation function, if you will, is something that we always have to be ready to help our investors overcome as a barrier. So those kind of are the ones that come to mind immediately.
Yeah, interesting. Okay. I think that basically answers my question. That was very interesting to hear about, and I'm really glad you could take the time to chat with us, Christian. Okay. Good luck with the new fund.
Okay, my pleasure.
Okay,
Thank you
all right,
very much.
thank you.